Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100. And it's being recorded on Saturday, September the 16th, 2023. It was a very interesting week. And I know I use that term a lot lately, but it truly was. And just to give a quick recap, we saw the upside being pushed and pushed and pushed all the way up to and including Globex from Thursday to Friday. What transpired on Wednesday and Thursday, where we saw inflation increase to the largest amount that it has in the last 14 months, and the market bought it, or they bought the market. And it presented, what in my view, a little bit more of a concerning or confusing picture in terms of, well, what comes next? What's the Fed going to do? And of course, the narrative, I believe, was, they're going to give us a pause. Look what they're doing in the market. Along with the narrative of, gee, bond market seems to be going counter to what the equity market's doing. They're not in sync. And it's like, okay. So we had a lot of things going on, a lot of confusion that seemed to clear itself up. And they hung their hat on the fact that the United Auto Workers went on strike against the big three automakers here in the United States starting on Friday. Now, I'm a little bit of a different opinion. And I think I mentioned this in my Elliott Wave updates on Wednesday and Thursday, that I felt it was more to do with expiration. And there was a large expiration on Friday in terms that it was a quadruple, which means that it was options on equities, options on futures, options, several different sectors, so to speak, or classes were expiring. And the options were expiring. And so, and as I also mentioned on Thursday, how I had been noticing where, particularly in Apple, where they kept running the stock up to a higher level, like trying for 180 on Wednesday, achieving that a couple of times, and then 177.5 on Thursday, achieving that a couple of times. And I believe that what they were really doing was monetizing calls and closing positions that likely they were going to not want to wait until Friday to take off. Regardless of all the timing of that, these are just things that I noticed. And come Friday, I was like, bring out the hammer. But the individual stocks and things that got hit on Friday, while it included Apple continued to then rally back, but this was more towards 175. So it kind of just presented a very interesting Friday. We saw a pretty strong reversal on Friday. And so I'm going to start here with the S&P, and I'm going to go over to the SPX and just see. SPX, you'll notice that I have reversed the alternate count that stayed alive for quite some time is, in my view, officially not really in existence anymore. And although I shouldn't say that I have gotten used to say never, because markets tend to do very strange things. But what they're going to hang their hat on now is that the Fed decision is due out on Wednesday, and the 19th, and it is due at 2:00 Eastern. That's when we'll know pause, rate hike, or whatever at 2:00. And then at 2:30 Eastern, we get Chairman Powell's press conference. So all will be made clear to what's going to be happening. Up until that point, it's conjecture. It's just all going to be like, we're guesstimating. We're just telling you, well, they can't do this, or they're going to do this. And they'll be pulling them all out, pulling all the stops out on all of the financial media. My point is, I'm going to wait. Now, if I had to go on the data that has been released showing a fairly strong increase in the underlying inflation, both on the consumer level and on the producer level, well, that might be enough, or we get that next 25 basis point hike, which they've talked about, we get it now. And then maybe we get a pause in October. Then maybe we get a pause towards the end of the year. And all to be decided yet. In any case, what we continue now to see is we have that additional little bump in the road called the United Auto Workers strike. If there are going to be others that maybe start going out on strike, are we going to start see this, not necessarily rebellion, but this protesting against what a lot of workers are saying? No, this isn't fair. You guys at the top get to live the way you choose, and we need to continue to fight for fair wage. Not our fight, though. So here in the SPX, I now am in agreement that both are using the same count. And that is that we have finished primary wave A, primary wave B, also done, primary wave B, complete at the 4607 high on July the 24th. And from there, we have started down, and this is on my weekly chart. We started down, completing that, and I'm going to drop this immediately. Let's go down to the daily. And then on the daily chart, we have minor 1 and minor 2, and we are starting to come down. So we basically, if I open this up even again, but I do want to come back to it in just a moment. I have 1, 2, 3, 4, and this 4 would have to go up to here, but I believe I'm going to have to redo this. And that we had the 5, and now this is 1. So let me just make that change real quick because I neglected to do it before. Oops, I marked the wrong one. I didn't mean to do that. I'll put that back in a moment and just get rid of all of this. So here we have minor wave 2. And here is minute wave 1 of minor wave 3. So I'm going to put minor wave 1. And believe it or not, I think we also completed minor wave 2 of, minute wave 2 of minor wave 3. So let me just put this all together. Thank you for your patience. This should have been done, and I could have just been flying through it. But I thought I had it done, and I did not. And you'll notice that when I get over to the future, it is done. So finish up and just get this all into place. And then you'll see that our counts will match. And what can we be expecting next? And what we saw on Friday was a reversal. And it was strong. And here in the S&P, I think the SPX was down, I think 50. And so the future I know was down, I'll come up to the future 56. So I am now going to be looking for, actually we have that 1, 2. I'm going to go back real quick to that daily, because here is the deal breaker, so to speak. We have yet on the daily to break below the 50 period moving average, the EMA. We have now broken below the SMA, the simple moving average, the 50 simple moving average, and that came in at about 44.81-ish. And of course, now the 20 and the 4 and the 8 are all like heading lower, but daily and the cash on the 50 period EMA still flat. And right now it is sitting at 44.50. So looking for it to break below 44.50, drop down to the 4-hour chart, and we still have the same. But now what do we have? Pretty much below all that. In fact, we'll go like this at 44.20. So we have, in terms of price, on Friday, we closed at the low was 44.47. The close was 44.50. So it closed right. We needed to break, and then we need that follow through to give us additional confirmation. And I believe that once it happens, we should get some additional acceleration. But thus far, on Friday, we did see some pretty strong acceleration within the SPX. So I'm going to continue to look for this to come down. Now let's go back out to our daily, and we're going to start building our picture. So what I do have already in is the primary C. So primary wave C would be equal to A at 32.89. We continue to hold that we have, that's our first level of support. We have this other level of support at about 31.88. And I'm just going to go out one more to see where that is coming in. And that is a trend line off of the low in 2009, the low for the pandemic low, and then coming up, and it happens to just kind of walk itself right into 32.89 on the weekly chart. And I'm going to come down to our daily chart, and we don't even see it. And so, but it is there. So again, coming back down to the 4-hour chart, we have 37.92. And then here we have the additional. So on our 4-hour chart, it's coming in about 3,050. So we have 100% wave. And these are the primary. The primary wave C would be equal to primary wave A at 32.89. Below that, we have that support. So equality is number one. Secondary is 1.618. That's 24.75. Again, we're in a primary C wave. C waves, their nearest cousin in terms of Elliott would be third waves. So both are pretty powerful and can be pretty destructive and are very directional in terms of, they really start to pick up speed, whether that is upside or downside. We do happen to find it when we drop into these third waves, that's when they really start to pick up and we get a lot of extending moves. So that's what I'm kind of looking for here. Friday was a damn good start, I got to tell you. So we have 37.92, 32.89. Now, I also have right in here before we get to that level, or right after the 30.50, is 29.80. Now, remember that 29.80 is taking us all the way out to my maximum chart, and I'm now running just a fib from that low to this high, and that comes in 382. So 382, 38%, 38.2% of this gigantic rally from 1932 to 2022 comes in at 29.80. Going back down, let's go back down to the daily chart. So we have 29.80 down here. And that's, I believe, a very strong candidate for the completion of primary wave C and cycle degree A. I'm looking for that cycle A to come in here. And after that, I'm still going to be looking for a very strong cycle degree B wave counter trend rally, and it should be fairly strong. And it is within that one. I mean, we'll be working out the fibs once we get the low and we get a kickstart. Then we're going to put in fibs for that B wave, and they undoubtedly will include the potential and the possibility that B will end up being irregular and possibly pushing itself to new all-time highs before we get a cycle wave C absolutely taking us to a nosebleed drop, and one that'll just make your nose bleed immediately. It'll catch your breath. So that all is yet to come in. Now, back to more of what we can expect possibly next week. It may be slow. It may be sideways as we wait for this announcement on Wednesday. I'm not sure of other, data that's going to be due out. And so what we got is on Monday, home builders confidence, and then Tuesday we have housing starts and building permits. Okay. And it's Wednesday we have the Fed interest decision and Fed chair. And then Thursday, initial jobless claims, Philly Fed, et cetera, et cetera. So again, we have got a lot of stuff. And then on Friday, S&P Flash US Services PMI. So we get that one again. And both of those are showing increases. So, the manufacturing and the services. So again, the Fed, we'll see what they want to do. But I am looking for this to continue. Here on the 4-hour chart, we'd be looking for this to break at 44.18. Now, ultimately, if we are in minor 3, it should come flipping and cruise right through the low. This is basis the cash market at 43.35. It should just break that and keep on going. So now let's start adding some additional levels, but now we're going to put them in for minor wave 3. And those are going to use our extensions. And we have connecting that small level to this level. And now we have it coming off. So what we have is minor 3 would be equal to minor 1 at 42.69. Now, granted, minor 3, longest and the strongest, should be greater. 1.618 is more likely. So we're still looking that we're going to hold above 4,000 to complete minor 3. Now, what are we working above that? We're working an intermediate first wave. Now, remember, we're in a primary C wave down. That will consist of 5 waves of intermediate degree. And what's inside intermediate wave 1 down? 5 waves of minor degree, where we have 1 and 2, so we're in the third. So yes, that would be a serious drop. If we started this wave at 45.08-ish, and we end up down at 41, that's a 700-point drop. That's a pretty big move. So, and then we get a 4, and then a minor 4, and then a 5. Maybe it will be the 5. And again, once we get these others in, we'll be adding additional fibs to kind of narrow this space down to where we can expect intermediate wave 1. Once that's done, then we get an intermediate wave 2. And we all know now, this was a wave 2. This was a wave 2. They can be very deceiving. They can be like, okay, we're off to the races. We're just going to go. Don't forget, inside this minute wave 2, we had both the CPI and the PPI, and they liked both. They were like, okay, these are great. We're going to rally anyway. And it was after that they decided, oh, maybe we kind of got ahead of ourselves and that we shouldn't have done that. And then they all came flipping down. So but it'll be 1 degree higher. So once we get intermediate wave 1 down, it'll be an intermediate wave 2, and that will consist of a minor ABC. So again, we still got lots of trading coming, and it will be, of course, and just so that you get a little bit of a bigger picture, if I'm looking for 5 waves down a minor degree, on any degree, so minor and intermediate, that we have the impulse part of it, which will be to the downside, is waves 1, 3, and 5. Wave 2 corrects wave 1. Wave 4 corrects wave 3. So 1, 3, and 5 in the direction of the trend, which right now is down. 2 corrects 1. 4 corrects 3. So we have 2 decent rally phases. And again, as we go up a degree, they're going to be a little bit bigger. So right now, minor, and what's inside of it are minutes. So basically what we're talking about here, that we're getting ready to drop into the minute 3 of minor 3. So we get that 3 of 3 move. We get some acceleration. What's going to help that? We start breaking through these moving averages. So let me drop down to the hourly chart so we can start to see how this is forming inside. On the cash market, it basically is kind of letting us know maybe 1, 2, 3, 4, 5, 1 minuet wave 1 of minute wave 3 of minor 3. So again, nesting 1, 2s, 1, 2, 1, 2, very possible, right? So again, nothing goes straight down. Now, let's flip over quickly to the futures market, which is where we do all of our trading. Here's, well, I'm going to go back out. Let's go to that daily chart. And now in the futures market, what we ended up doing at the end of the day on Friday, let me just kind of open this up, you see that we had the 50 period at 45.09. We broke it and we closed below it. This is in the S&P futures market. That presents a fairly negative tone to finish the week. So we'd be looking for it to continue on Monday. Now, bringing it down, let's take a look at the 4-hour first and open this guy up. And from what we can tell, we can see we're now, on the 4-hour chart, we not only broke the 50s, we broke the 200s. So and then you could see on the 4-hour chart, we started to accelerate twice. So for pretty much, for 4 and 4, we were accelerating. And now we will see, we should continue to get follow through. Now, minute wave 3 should definitively break below 44.83, which is the low for minute wave 1. I'm going to break this down again. Let's take a look at the hourly chart, and let's open that up. Let me get this up closer to where it belongs on our charts. We're going to put it right there. So wave 1, minute wave 1, A, B, C, minute wave 2. It did go higher. It didn't break any rules. In fact, we had additional resistance at 45.74. And it got all the way up to 66, 67. So it got pretty close, but held and then started to drop. And then once it was clear on the strike, we just started to drop. So what do we look like so far on an hourly chart? 1, 2, 3, 4, 5 possible, or 1 of 5, 2 of 5 possible. So we still need a little bit more information. So if we really start to kind of head lower tomorrow, when Globex opens, we're going to have an understanding of what we're looking at. That this minute wave 3 and the start of minute wave 3 is really beginning to unfold. Now, what is the other side of this? What also could happen is that we can count 1, 2, 3, 4, 5. Minuet wave 1 of minute wave 3, done. We get a little wave 2 here. We'd be looking for a move possibly back towards 45.19. Not looking for a whole lot. Not looking for these big bounces, but a wave 2 bounce could probably take us back to 45.29 to 45.34. Again, using our moving averages, which is your first go-to without a fib. Often, at least on an hourly chart, fibs line up pretty cleanly with our with the moving averages. So, case in point, let's just talk for a moment and run. If this indeed put in that little small wave 1 low, and that was the high, it was right there. We'll take it down to that low. 236, 382, 21. Here at the 200, 30. Here at 38, the 50. So you can see they all kind of line up. Now, first up, the 4 is going to be the quickest one to break. The 8 sitting right above 45.10, which is 236. And then 382 sitting by itself. But if we get these breaks and it gets strong enough, then we'd be looking for 45.30 to 45.38. And that all fits in. Now, I'm not saying that the small wave 1 is done. We might get an extended 5th wave. Got a beautiful 3rd. We might get that extended 5th as well. Then what are we looking for? So now I'm going to back out to that 4-hour chart, and we're going to start adding our fibs on this whole picture. And to do that, I actually need to back out one more and go out to the daily. Can I get it here? I can. The first one we want to put out is minor wave 3. And those we're going to do via this. And I will take it up one more, and we're going to put in the larger. So that is that. Let me go up one more to the weekly, and we're going to look at this one. Down to there, and back up to here. So And this is primary C. Primary C equals primary A at 33.3675. Not bad. We notice on our longer term charts, we hit something right around 32. That all works. Now, what we have below that, 1.618 for primary C, 25.34. Realistic? Can be. Can the market get there? For sure. Fibs are telling us that it can get there. And it would fit. We're definitely looking for the market to get below 35.02, which was that October low. And from that level, I'm looking for more because wave C should take out that low and keep going. It would. 33.36 fits that bill. So 100%, but I'm always going to be looking for a little bit more because the C wave can be very powerful. So we have that, and then we have that 29.80 right in here. Still that 382 of that much bigger picture. Now we're looking at that supercycle degree picture. And 382 of that whole rally, that supercycle degree rally, a 382 retracement down from that of 90 years comes in at 29.80. Now, are we looking for that to really hold? Well, maybe for a primary C wave and then putting in that primary cycle A wave low, maybe. Or are we going to drop? Well, we could maybe pause there. So maybe part of primary C comes in there, but then we extend lower and we end up here. Then, so still same as that picture I was talking about before, looking for a cycle B wave counter-trend rally, but we need to get quite a bit done. So the shorter term to midterm picture, as we move towards year end, as we start heading into the fourth quarter, is not as bright or pretty as the world wants to think. So there's got to be, I think, some other things that are going to come in there and disrupt this bullish picture that gets presented to us, disrupt this interest rate picture that has been delivered to us about what the Fed's going to do, the things that inflation is under control, et cetera, et cetera. There are a lot of things, strike being one of them, a nationwide strike, which could, I mean, the big three have already started talking about how they're going to lay off some of the plant workers. Well, we have to. If we're not going to have as much production, we don't need all these people. So people are going to be unemployed. So the unemployment rate's going to go up, whether it's temporary, whether it's not. Fact is, the unemployment rate will go up. What's that going to do? Well, that kind of shifts the inflation conversation a little bit. And actually, even with the strike, what is the strike looking for here? They're looking for an increase in wages. They're looking for a bigger percentage of an increase in wages. Well, what is that? That's wage inflation. So we see this disruption to the inflation picture and to the game plan that the Fed has now. I don't know what the answer is. I don't know what the outcome is going to be. And anybody that tells you that they do, your choice whether you want to believe them or not. I'm leaving it up to how this all works itself out. So, but I'm already telling you that I'm looking for lower prices. Now, this could finish the whole thing, right? This basically, you could say, looks like pretty much an ABC, and it's pretty flat. That high, 48.80, and this one, it got as high as 4,800. This high is 46.18. On a weekly picture, pretty close. So if we're looking that it could just be a little bit more than a flat, this coming down to here would still be considered, in my book, flat. And that is always a possibility. So this, I'm not ruling this out, but I'm always going to be looking for that little bit more. And I cannot predict the future, so I don't know what's going to actually come out of negotiations, how long it would take to negotiate, what concessions may or may not happen. But I'm going to tell you that initial drop, people are going to get ready. People are going to start paying attention. Where else is it going to affect? What do we have now coming up, right? In 2 weeks, we're at the end of the quarter. What does that put us into? One more time, now we get another round of earnings. So we're going to see all of that start to come through. In fact, they're already putting out the word. Come on, tell me what that is. October the 13th, Citigroup reports. So we got the banks already starting to get prepared within a month. Within a month, folks, we start our earnings season all over again. So what's that going to produce? Now we got all that hype and hoopla about how these earnings are going to show what they did or didn't do. So the conversation goes on. The push continues. But again, what will it actually result in? Elliott wave and the pattern is kind of telling me, I don't know if we're really all going to fall in love with everything that's coming out. There might be a few surprises in there. There might be a twist within our economics or a twist in something on the global scale. We still have a lot of stuff going on around us that could really upset a lot of apple carts. So I just trade what you can see. And they always say, well, you're trading in the equity markets. You've got to be able to trade for the future. It's like, well, can you guarantee that future? No. So I'm going to be more prepared. Again, daily chart, still looking for at least, if we're in this third, it's got to break first. It's got to break 44.85, 44.83. That's that low. That's a good one. It starts to break there. Then we have support at 44.22. That's fib support for the minor wave 3. And it should not, minor wave 3 should by minimal come down to 43.14. We have the 200. This is the daily. We've now broken on the futures market. We broke the daily 50. So we should see some follow through. What would be up next on a moving average basis? The 200. The 200 period EMA sits at 43.44. The SMA sits at 4,300, basically, just below. What do we have in between? 100% fib for that same minor third, 43.13. Now we're going to start adding one more layer, and that's going to be the minute 3. Well, let's see what we start to get, if anything, lining up with us. So what we have here is 100% of 44.52. Well, I know minute 2's got to come in bigger. So we got 43.82. First, it takes me below there, like it. Takes me below there, like it. So 43.82, and it puts us above that. 2.618, 42.68. So it depends on how hard what actually comes in and how the market wants to interpret and feel about what's yet to kind of be pulling in here in terms of the Fed and this now nationwide strike, and how and where that maybe rolls and you get others joining. So again, a lot of unknowns. So we're going to have to allow for deeper retracements lower. So we have that. Then we have 42.68, 1.618 on the minor third, brings us back to 41.37. And actually, that's pretty deep. Remember, we're in intermediate wave 1, it consists of 5 waves of minor degree. We're in minute wave 3, which will consist of 5 waves of minuet degree. So we got a lot going on and a lot of downside possibilities. So back down now to the 4-hour chart. We can just take a quick update and look at it there. And we're still kind of looking like, you see, on the 4-hour chart, it looks pretty good. And here again, what do we have here? We have the 50 and the 200 all grouped together. Smash and fall. See, that is hitting that, going through it, and producing acceleration. This is what I'm talking about. Third wave. We start to break down. We start breaking through the moving averages, and we don't look back. We saw it. We got it. Another confirming type of move that tends to have me lean into upside is done, but I can't rule it out. I can't rule out that they decide on Monday, the hell with it. We're going to buy it right back up. And they come in and they start again. And they're going to base it on something that may happen on Wednesday. Then they're going to have to say, well, now we need to see the earnings. So you're going to see this excuse after excuse after excuse for why we're not going to sell off until we have more information. And I don't know how long that's going to actually continue to work before people go, I don't know. I think we're going to change our mind and we're going to start protecting ourselves. But in any case, we have our levels here. Now, bringing it down to the hourly chart, because again, what we want to start looking for are where we might get little turning points. Now, off an hourly chart, yeah, you might want to step in as a day-by-day type of trade, a swing trade, et cetera, et cetera. So you start looking at the hourly chart. Where are we? Well, we got 1, 2, 3, 4, 5. So we're going to do a wave 2, or is it 1, 2, 3, 4, 1 of 5? Yet to be determined. So we'll find out pretty quickly to how Globex starts and how much movement we actually get in the Globex, up or down, which should give us some clues. If we start breaking below 44.92 on tomorrow, when Globex opens, well, then we're heading to this. That's our next level. 44.83 is the next level. 44.84. That's the next level. If it breaks 94, we're heading to 84. If it breaks 84, we got more room. That's where we come into minute wave 3 would equal minute wave 1. And that's down at 44.52. And then what do we got below that? 44.22, which is minor 3, 618, just going to be a pause. It could be enough to give us a low for minute wave 3, but it's not going to be the completion point for the minor third. No way. Because we're looking for minor 3 to break the low of minor 1, and that's going to be down here. So again, minor 3 equals minor 1 at 43.14. So that would be a target on a little bit longer term. All right, on the hourly chart, we're working through minute wave 3. 44.52, 22, 43.82, minute 3. Then we get a 4, and then we get a 5, bringing us down to here or lower. So one day at a time. Again, tomorrow and then Monday, I would be looking for the completion of, again, minuet wave 1 of minute wave 3 of minor wave 3. So again, we're nesting. We do 1, 2, 3, 4. We did a 1, 2, 3, 4, 5 to produce minute 1. And then we had an ABC, minute 2. We're in minute 3. There's going to be 5 waves of minuet degree. If we finish the first, we're going to have a second. Wave 2 corrects wave 1. And then we get the 3 of 3 of 3. So there's still a lot to happen. Getting down here, I think once it all kicks in, should not take very long. All right, going over to the NASDAQ now. And I will start with the NDX. And here's, well, this, I'm going to put 1, 2, 3, 4, 5. Yeah, I just didn't switch it back around. So let me just do that now. Again, my apologies. I keep forgetting to finish this up and actually come over here and do it. And then it was an irregular for 2. I'm going to move that 3 up. I put the 4 here. Ah, crap. Five here. I really shouldn't even be doing this detail. Just kind of put my 1 there. This just clogs up our chart. And so I'm going to put the 1 underneath here. And I will take care of these later. I'm going to put the 2 up. I'll move it in just a second. I'm going to put that up here and edit it so I can get that in alignment. And then we'll go down from there. And I will finish the balance in a little bit. I'll do it now, because if I don't do it,
And I forget. Dark one, like, what the heck is he talking about? Let me just put that on there. The deal when you do it by hand, you actually have to can't forget that you forgot to do it. Go to 18. All right. So 1, 2, 3, 4, 5, minute wave 1, ABC, minute wave 2. And then what do we got? 1, 2, 3, 4, 5. So cash basis, yeah, could be a minuet wave 1, and these are minuet waves. So it could be, but maybe we get a little bit more. So again, we're resting on the hourly 200s. Got the SMA and the EMA very close together, about 15,202 to 15,175. This is showing me. So let me go here. Let me get out of its way so it'll show me. 15,177 is the EMA. 15,187 is the SMA. So yeah, we got a little bit more downside. We can get there. Our low that we saw on Friday was 188. Excuse me, 173. But that doesn't make sense. Yeah, it did. It got down there. It got down and started to break it, but it held it. So maybe we get a little bit more. Now let's start to build in on the NDX for those that want to trade the NDX. We'll go out here. Here we have the minor. So what I need to add down on the hourly chart is the minute. So we're going to go there, there, and yeah, I'll take it there. So minute wave 3 would equal minute wave 1 at 15,032. So, but I'm always going to be looking for a little bit more. So what do we have? 14,769 to 14,736. Seems very appropriate. Minor wave 3, just a pause, but it could be the point where minute wave 3 completes. That's all basis the cash market. And could be here, and then we get a bounce. So either we bounce from here, or we bounce from there, or actually we bounce from here. Lots of things coming into play, and we'll see. I happen to think there's going to be some follow through. Now there's a lot more information on the strike. There's a lot more on what each side is going to say, et cetera, et cetera. So over in the NQ itself, much stronger selling we had. And 1, 2, 3, 4, 5. Kind of cleaner. Doesn't mean it's over. 1, 2, 3, 4. 1 of 5, 2 of 5, 3 of 5, 4 of 5, 5 of 5. Very possible. Let's go back out to that 4-hour chart and let's fill in some of our blanks. One of them is we need to put in, let me go all the way out. 3 week, yeah, I should be able to do that. And we're going to go here. Yep, got it. And we're going to start putting in our fibs for primary C. Primary C would equal primary wave A at 97.80. Now here again, let's just take a peek at the flat type nature of what we've done thus far. Where wave B is nearly is the same size as wave A, so wave C we'd be looking for the same in respect. That puts us at that 100%. It clears this. It takes a sub 10,000 at 97.80. Could that be a point where primary wave C would be done? Yeah, it could be. It could be. Otherwise, we're looking for much lower. And I'm not going down that far. Could, because I don't know what's going to really come up. I don't know if we're going to have a really crappy earnings. Are we really going to have a Fed that's going to be like, okay, we're raising again. We raise at Wednesday's meeting, and it's still looking pretty bad. We got some nastiness coming, and they decide they're raising again. All things are possible, folks. So we could really see a C extend, a primary C extend. So that's that one. I'm going to bring it down to the daily. We want to take a peek on our daily chart. I believe that we saw that on the daily in the NASDAQ and the NQ, the market came down and closed right at that 50 period EMA, which is at 15,383. Broke briefly below it, about 10 points, bounced and got back above it, closed above it, just above it. That, if we get a nice little push through, presents us with a negative, at least for when it occurs. If it occurs, we're going to start looking for a little bit of acceleration. Maybe it starts tomorrow. Maybe we have a gap down opening tomorrow and start a Globex. I don't know. We definitely need to get below 15,346, which is the low of minute wave 1. Minute wave 2, wave 3, definitely looking for that. So, but now let's fill some additional. We want to look at minor 3. So let me go down to the 4 and open it up, and then we're going to put in for minor. Wow, I got to change this. That came in really weird. Oh, the December contract. I've got to put it in for the December contract, which was 16,251. Edit that properties. Wow. 16,251. And let me just double check. Have it had some change? 50. It did have some change. 0.50. All right. So we're going to say, oop, don't do that one. Ooh, come on. Okay. Now we'll bring that up. And so that's going to change a little bit on our numbers. And now I want to put in for minor wave 3. Oh, shoot. Let's make it work. There you go. That low to that high. Here we have minor wave 3, 14,396. That would be where minor wave 3 is equal to minor wave 1. Possible. But I'm always going to be looking for a little bit more, as I keep talking about. So we're looking like we might. 14,000. We're at 15,300. Got a lot of dropping to do. So now I want to add minutes. So I'm going to come down to the hourly. I'm going to add one more. It'll be right there to right here. Now, I know the chart starts to look a little clogged up, and some of you made comment on that, but this is how we build it. And now we're going to look for the overlap. Where does the overlap come in? I'm looking for minute wave 3. 1.618 is 14,903. Well, I got minor, I have the minor third, 618, which I'm looking for to exceed, but we may pause there. 14,952, I'll call it. And maybe that's could be minute wave 3. Or the overthrow takes us down to the 14,903, but we bounce nicely. We bounce stronger off that point in a fourth wave. All things are possible. So you start to put together your little bit long-term picture. What is the potential? What are the possibilities? So we have that support at 15,214, 215 for minute. But if this indeed is just the beginning of minute 3, I don't see how that holds. I see it coming down to here, because we get, if this is one minuet wave 1, minuet wave 2, minuet wave 3, minuet wave 4, minuet wave 5, sure. And we'll be able to fill in these blanks once we get additional points to run fibs off of. But right now, this is what's possible. And when I fit it into what we've already done, you're going to be looking for something that's going to bring us down to here. And it should happen actually pretty quickly. In my view, it should happen pretty quickly. Let's not forget that we were below 15,000 back in August. We did drift below it. We grabbed right back on, but we drifted below. And then I can go back to mid-August, and we were solidly below it. Then we got, that was minor 1. Then we got a minor 2. So minor 3, we're definitively looking for it to break, right? We're looking for all of minor 3 to break below this low, which was 14,798. Minor 3 needs to break that low. So what's up next for minor 3? Right down here, 14,392. That works. So we can start to see where the potential Fibonacci-wise comes in, and why I run this, the minors, why I run the minutes, and where do they match up. So again, moving average-wise, we're below. Our hourlies were all below. It's free fall. So now we got just fibs and price support. You're going to find price support here after the start of that big rally. So we have price support here, 15,237. We have 15,215. So we're going to get a little play in there. Then we have the low of that B wave, 14,949. We got 51.49, 49.03. You got a little bit of a cluster there, price and fibs. So you're going to see how I build that, where I look for it. Is there still the potential that the market can turn and go higher? I can't say no, that there's not. But the intensity that we dropped, for it to reverse it, it did 5 down. It's going to make it very strange. It's going to make it an A, B, C. And C did not take out the low of A. Getting close. And I don't, and what is that then? You know, this is an X. This is A, B, C, A. What's the 5 waves down? So none of it really fits more into that other alternate counts, at least how I'm seeing it right now. So I would say, I'm not going to say never, but I think the probabilities are pretty low. So again, for next week, focus is going to be on Wednesday. And then the focus, no matter what that interest rate challenge or result may or may not be, market will absorb it, the market will decide, and then the market will go like, okay, now we're getting ready for earnings reports. Mark my words. It'll be interesting, but we'll see how they all want to handle all of this. I do think we're in for a little bit of washout from all of this kind of like typical wave 2 nonsense. We've done it before. We've done it many times before. We had a wave 2. We had a wave 2. You know, we get them all over the place. Smaller wave 2, bigger, smaller, but still full of pushes. Full of pushes. This is like buying on a PPI and buying on a CPI and buying again on the PPI. Wait a minute, they're showing an increase in inflation. You guys don't like inflation. Why are we buying it? Oh, they did. Excuse me. So for the sake of time, I'm going to wrap this up right here. And thank you very much. But we looked at this technically. Fundamentals kind of slide in, but we don't know what they're going to be. But we know likely what they'll interpret according to what our technical pictures are telling us. Have a great trading week. The next Elliott Wave update tomorrow after Globex opens.